Hello, friends. Greetings of the day. Welcome to the online session of Business Economics. Friends, today in this session, we are going to start chapter number 5, that is Business Cycles. Friends, you all know that the economy of any country passes through several ups and downs. These ups and downs are popularly known as business cycles. Now, there are certain phases of business cycle. The first phase is known as expansion phase, which is also called boom or upswing. Another phase is peak, or it is also known as boom or prosperity phase. Third phase is contraction, which is also called downswing or recession. Then comes trough or depression. So any economy will pass through these four stages, and these four stages can be represented like this. There is trough at the initial level, then the economy goes on expanding. So the second phase is expansion phase. The expansion continues and it reaches to the highest point. When it reaches to the highest point, it is known as a peak phase. After the peak, it stays for some time at the highest point, and then again it starts decreasing or declining. And when economic activities start declining, it is known as contraction phase. When the contraction reaches to its lowest level, again it becomes the trough. The trough is also known as the depression in the economy. So this cycle goes on continuously, and these phases will continue, but these phases do not have the similar or same time level. It may be different time. There may happen that expansion may run for 6 months, peak maybe for 2 months only, again contraction maybe for 1 year or 2 years. So time period, or we can say the duration of all these phases, are not equal. Now let us take a look of all these phases one by one. The first phase is expansion. Expansion, as you know, that it is a positive situation in the economy. It is characterized by increase in the national output, employment, aggregate demand, capital and consumer expenditure, sales, profit, rising stock prices, and bank credit. So all these things will go on increasing, and there will be positivity in the whole economy. This state continues till there is full employment of resources and the production is at its maximum possible level using the available productive resources. So in this phase, expansion phase, we can say that there is full employment of resources. There may be involuntary unemployment. Involuntary unemployment is also almost zero. Whatever unemployment is there, it may be either frictional unemployment or a structural unemployment. So those people who are willing to work, they will get their jobs. Those people who are willing to do a particular kind of duty, they will get job. So involuntary unemployment is almost zero. There may be frictional unemployment. Frictional unemployment means the unemployment which is due to changing the jobs or strikes and lockouts. And due to the strikes and lockouts, when the work is suspended, during that time people remain unemployed. For that time period, the unemployment is known as frictional unemployment. So this kind of unemployment can be seen. Or there can be a structural unemployment. Structural unemployment means the unemployment which is caused due to structural changes in the economy. So for example, when there is change in the technology, the people who are working in the old technology may lose their job. So that kind of unemployment is structural unemployment. When new kind of products or innovative products are introduced into the market, the people who were working in the older kind of products may lose their job. That is also considered as structural unemployment. So in the economy, frictional unemployment may be seen or structural unemployment may be seen, but all those people who are willing to work, they will get jobs. So involuntary unemployment will be almost zero. The prices and cost also tend to rise faster as there is positivity in the economy. The prices of the products will also go on rising. When the prices of product go on rising, on the other hand, prices of factors of production will also increase. And when the prices of factors of production increases, the cost of product will also increase. Good amount of net investment occur because there is positive sign in the economy. All the people are ready to make investment in the economy, so investment will also increase. Demand for all the type of goods and services will also rise. There is altogether increasing prosperity, and the people enjoy high standard of living due to high level of consumer spending, business confidence, production, factors of income and profit and investment. So when all the things are increasing, when there is all over positivity in the economy, the people will also feel high standard of living. The growth rate eventually slows down and reaches its peak. So friends, when economy grows, it cannot happen that it continuously go on growing. There will be a time when this growth rate will be slowed down, and when the growth rate has slowed down, it means that it has reached to its peak. And when it reaches to the peak point, it is the second phase of the uh, business cycle. So the term peak refers to the top or the highest point of the business cycle. In the later stages of expansion, the inputs are difficult to find as they are short of their demand, and therefore input prices increases. Now when the economy is in the expansion mode, during the expansion, when prices of factors of production goes on increasing, and as a result the input become costlier, and when input become costlier, the output prices will also go on rising, because when inputs are costly, the output will also become costly. So when output prices become increasing, as a result the cost of living will also increase. And when the cost of living increases, it puts a strain on the fixed income earners, because those people who are earning a fixed income, their income will not increase, but on the other hand the cost will increase. The cost, as a result of increasing the cost of all the products, they will face a burden over their income. Actually the demand will stagnate, because those people who are fixed income earners, they will start cutting down their demands, and as a result the demand will stagnate. This is the end of expansion phase, and it occurs when economic growth has reached a point where it will stabilize for a short time, and then uh, it will move in the reverse direction. So when it has reached down to its the highest level, it will stay there for a short time period, and after a short time period it will start reversal. This reversal process is known as contraction. The economy cannot continue to grow endlessly. As I said before, the growth cannot be continued for endless time period. It will be a time where it will reach to the highest point, and when it has reached to the highest point, it will start reversal also. As mentioned above, once peak is reached, increase in the demand is halted and starts decreasing in certain sector. So when it has reached to the peak, the demand will stay there, it will be halted there, we can say the demand will become stagnant there, and in certain sectors the demand of the product will start decreasing also. During contraction phase, there is fall in the level of investment and employment. When it was expansion, everything was increasing, investment was increasing, employment was increasing. But when the phase of contraction starts, the things will now go on decreasing. Investment will decrease, employment will also decrease. The consequence is there is a discrepancy, or we can say there is mismatch between the demand and supply. Now supply will be more, but the demand will be less. Why? Because the people have low income and the costs of the product has increased. So when income is less, but on the other hand the prices of the products are more, so people will start cutting down their demand, so demand will be reduced. But on the other hand the supply of the product will be higher, so supply far exceeds the demand. Initially, this happens only in a few sectors and at a slow pace, but rapidly it will spread to all the sectors. So, in all the sectors, supply will be more, but the people will not demand the products. So, as a result, the demand will be less. And then the extreme point of this contraction is known as trough or depression. When the contraction reaches to its extreme point, it becomes the trough, or we can say it is depression. So depression is the severe form of the recession and is characterized by extremely sluggish economic activities. When economy becomes extremely sluggish, or we can say there is very low level of demand, there is very low level of employment, there is very negativity in the economy, it is considered as depression. During this phase of business cycle, growth rate becomes negative and the level of national income and expenditure declines rapidly. So when economy has reached to the depression level, the growth rate will become negative, and as a result the national income of the economy will decline as compared to the previous years. The national expenditure will also decline as compared to the previous years. So this is considered as negative growth rate. So this creates negativity in the economy. Now demand for products and services will decrease, prices are at their lowest level. When prices are falling, still people do not have purchasing power, and when people do not have purchasing power, the demand of the products and services will decrease and decline rapidly, forcing firms to shut down their production activities. Now, when prices are falling, still the people are not having purchasing power. When people are not having purchasing power, they will not demand the products. As a result, the sales of the firms will be very low. Firms will not be earning revenue and they will be forced to shut down their production facilities. And when the firms force to shut down their production activities, as a result again it will give result to unemployment. Since companies are unable to sustain their workforce, there will be mounting unemployment, which leaves the consumers with very little disposable income. Now as I said that when companies shut down their production activities, they will retrench their workforce, and when the workforce is retrenched, workforce is kicked out of the activities. As a result, it will create unemployment, and when there is unemployment again, the income of the people will be stopped and they do not have purchasing power. This will again create a worse situation. A typical feature of depression is fall in the interest rate. Now, as there is a depression, everything is decreasing. On the other hand, the interest rates will also go on decreasing. With low rate of interest, people's demand for holding the liquid money increases. When interest rates are low, as a result, people are not willing to invest or deposit their money into the bank. Rather, they will hold cash money with their hand. Despite low rates of interest, demand for credit decline. Now interest rates are lower. On the other hand, people will not take loans because they do not have confidence in the business. And when the people's confidence in the business has been lost, they will not be ready to make investment in the business also. So the demand for credit, we can say the demand for loan will also decline because investors are not ready to invest in the business. At the depth of the depression, all economic activities touch the bottom and the phase of trough is reached. So when depression is at its extreme situation, or we can say depression has gone into the depth, the trough has been reached. It is very agonizing period causing lot of distress for all. Now when we have reached to the trough point, it is very much distressing period, we can say it is very much miserable situation, agonizing period. Agonizing means very much miserable period for everyone. The Great Depression of 1929 to 33 is still cited for enormous misery and human suffering it has caused. So, friends, you quite very well remember the depression which was caused in 1929 to 33 in America, and this has spread it to all over the world, which has created very much miserable situation for the people all over the world. Then when the economy has reached to the trough, it is negative sign, but this negative sign will also not continue for a longer time period. As growth is not endless, the contraction is also not endless. There will be an end of contraction, there will be an end of depression, and when there is end of depression, the new phase of recovery will start. The economy cannot continue to contract endlessly. As I said, it cannot expand continuously. In the same manner, it cannot continue to contract endlessly. So there will be an end of contraction, and when there is end of contraction, we can say that there will be a recovery phase in the economy. And when there is a recovery phase of the economy, again when it has started recovering, the trough will generally last for some time and marks the end of pessimism and the beginning of optimism. When the economy has reached to the trough, it is the lowest point, but when it starts recovery, it is known as the end of pessimism, and it is the beginning of the optimism in the economy. Now again the positive sign will start in the economy. This reverses the whole process. Now all those things which were decreasing in the contraction phase will start increasing in the recovery phase. The process of reversal is initially felt in the labor market. So when recovery starts, the people, the laborers, are ready to work at the lower wage rates also. When there is pervasive unemployment, force the workers to accept wages lower than the prevailing wage rates. So when the people start working at the lower wage rate, they will get income, and when they will get income, as a result, the demand will also start coming into the market. So these all are the phases of business cycle. Thank you for now. Have a good day. Goodbye.